All right, quick recap of Wednesday's action, Thursday morning now. So S&P, right? So we had a bit of a drop, but we closed above what I would call support, very temporary short-term support. So not bearish, not bearish. I am obviously bearish. I think we're going to go lower, but this is not the most bearish candle. The Nasdaq, pretty similar stuff. So we closed a bit lower, proportionally speaking, but still above that support zone. I didn't draw these support zones, so it's pretty clear to me that we hit resistance, which I'd drawn in a while ago, and then we closed above support. So I think these lines were completely correct. Dow Jones was stronger. It was actually the only indice that was green. So now it's starting to outperform the S&P, but that's really if you zoom in and get a bit too detailed about your analysis. This also is not bearish, and you can see how this may just go higher. Now, look, we've got initial jobless claims today, so anything can happen. Let's see. I think bad news is bad news. So if there's bad news, then we'll probably go lower. Honestly, I think this whole retracement higher is just technically driven because, the news that the banking crisis is over. I think that's wrong, and I think we're just going to go lower. So I'll get to the KRE later. I think that's what will lead us lower. I think all we need is like one bank in the headlines failing or having issues, or I think it may even be a senior bank, and then everything's back down again. So Russell 2000, look at that, complete anomaly. Just you can tell the S&P, the Nasdaq, and the Dow Jones are all much stronger compared to the Russell. The Russell is really a representation of smaller businesses, and again, it's the smaller banks that are grabbing the headlines, but the senior banks are also weak. So look, the Russell for me, if the other three move a little higher, which they can do, right? They can go back up to their old high. The S&P can go back up to its old high. I don't see a breakout. I don't see the S&P going to 420. Sorry, the SPY, I mean. I don't see the Nasdaq closing above 322 and then marching for 330. Obviously, it can happen. I just don't see it. Fundamentally, macroeconomically, geopolitically, inflation rates, even with the rates going down, that's just a sign of bonds being bought out of fear. The Dow Jones, that probably could close above here, but what, marching all the way up here? No, you're just not allowed to do it with what's going on. And the dollar being dumped all around the world, by the way. It's like a coordinated decision by the East. I think Malaysia was the latest one to just say, we don't need the dollar. After a bunch of other ones said it, this week, a load of countries just came out and said, we don't need the dollar. So it's something's happening in the background. So for me, the Russell will actually, I don't see it climbing all the way back up here and closing above 180. What's more likely for me is that we start going towards 170. And why do I think that? Well, not specifically the XLF. Actually, I'll go straight to the KRE because of this. Because of the regional banking stocks, yes, we rallied off the lows, but this is not going to be a double bottom. I mean, it wasn't able to close outside of its descending line when these indices were making a nice move higher. Like look at the Nasdaq, look at this. Whilst this was happening, the KRE was unable to even close above here. So now they've done this move, and I don't think that they have the power to go higher. And we have news coming out. I just think we're going to close below this low. I think we're going to close around 41, maybe even below 41. Close below 41 in the KRE for me is sticking a nice fork into everything. The KBE you could expect to close near its lows, 34, maybe underneath 35 at least. XLF, start venturing down here, 31.22. Maybe start to venture into the gap zone. But, the point is, I think the banks are going to go lower. And then I think the Russell will be going lower, right? I mean, the Russell and the XLF look very similar. And then these guys, sorry, your scheduled party up here is going to have to be postponed, and down we go. So that's what I think is going to happen with the markets. The VIX, ignore this. I mean, obviously, if everything starts to go lower, the VIX is just going to have to be forced to go back up into the 20s, at least the 20s. but I reckon we're going to be going back here, high 20s, once this starts to fall apart. Once some of the big banks like Citi, HSBC, but let's be honest, for me, Deutsche Bank is the one. It's the one. I think this one has more problems than Credit Suisse, which has already been killed, by the way. And we also have the regional banks. I mean, don't forget First Republic. Look at it. This is ready to go down with the KRE today. So watch out for the banks, not just the small banks. Okay, let's move to rates. Rates are becoming interesting again. So you can see we're starting to identify a ceiling on the 1 year, on all of them actually. And I think the point is, okay, rates are going down. Better way to phrase it is bonds are being bought. Bonds are being bought out of fear. And this does not help the Fed's inflation fight. They want yields higher to tame inflation. But if people are buying bonds, then inflation is going to reaccelerate. And the Fed is it wants rates higher, but people are buying bonds out of fear. And that's not helping the markets, because if bonds are going low, if rates are going lower and lower, I mean, we know what's happened. That's usually a signal that the market is going to start going lower too. So for me, the 1 year is finding a bit of a ceiling up here. I don't know if we're going to go sideways or lower. I think we might go lower. And I say that because the thing is, the 1 year is a bit of an anomaly. It's so short term that it can't go too low because of where the Fed funds rate is and where it's anticipated to go. I know that the market's anticipating the Fed rate dropping rates, cutting rates later this year, but yeah, I'm not really sure. The 1 year is harder to call, but this 2 year and especially the 10 year, we'll get to the 10 year. Look at this. The ceiling here is much lower. I wouldn't even call it here. I'd call it more like here. But you can see, look, lower high in the 2 year, despite this massive drop. We're going lower already this morning. We're going lower. I don't know if this is the floor, this is the low or this is the low. I just put an average here. It's not a strict low. But you can see, especially after the 1 year, look how weak they are. The 5 year, look at this. The floor, is it there? Is it there? It doesn't matter. We may even visit it today. I don't think we'll close below it, but next week we could. But probably the most important is the 10 year. Look at this. And I was saying this a couple of videos ago, and I saw a few articles about it yesterday, and I need to just re-emphasize, look at this. And I'm doing obviously the video this morning, but I was going to say that today we will probably close below this trend line. I mean, let me be extra strict about it. Let's say it's here. The point is, this ascending line, by the way, I don't know how credible it is. I say that because it only hit it twice, and it was at the very beginning. It's not like we touched it here and again here. So I don't know how credible it is, but the point is, it might not even matter, because if we close below this horizontal line, this ascending line, let's call it 3.2 points. If we close below 3.2 on the 10 year, that's going to be pretty chaotic. To me, that will suggest there's a new move in bonds, and we can just look at the flip side, look at the TLT. Why not? I never look at the TLT. That'll probably equate to, well, yeah, look, closing above resistance. And then what? This is like a quadruple top breakout. That means bonds are going to go straight. We may have to cover this a bit more then. Bonds will go straight up here. That's not the straightest line, but you know what I mean. And what does that mean? That means the market's going to go lower. Because at the moment, the momentum is bonds up, market down. So, banks lower, Russell lower, and I'm sorry, but S&P, Nasdaq, Dow Jones lower, as everyone piles into bonds out of fear. And then you got your inflation problem. So, okay, anyway, the 30 year, I think that covers the 10 year, right? We close here-ish. That will equal the TLT breaking out. And 30 years, same thing. Look, we're going to close below this ascending, and this ascending counts to me. And we'll basically go here, straight to the low 3.4 on the 30 year. So, that's why I was sort of fumbled a little bit on the 1 year. Not as obvious for me. I mean, look, it's green today. You know what I mean? So the 1 year for me, I'm just going to ignore it in my general analysis of rates and bonds. But as soon as you start hitting the 2-year, the 5-year, 10-year, the 30-year, you can see the pattern. Lower, lower, lower. People are buying these longer term bonds just out of fear. The 1 year is just a bit of a, it's a bit harder to call. So yeah, I'm watching especially the 10-year and the 30-year at the moment, and the 2-year. Have to always watch the 2, but really the 10 and the 30 to judge rates. And actually a TLT is a 20-year. So that's kind of like an average of the two. So for me, this TLT, which is obviously the opposite to the bonds, it's time to watch that. So that's rates. Yeah. Bonds up, rates down, markets down. That's what you need to think about. Okay, let's look at the dollar. Dollar is also trying to hold on here. So yes, we dropped down here, 101.5. We held, we bounced back to resistance. This is really zoomed in stuff here. Today, what are we going to do? We may go back up and test this descending, but I don't think we'll close above it. I think we're really going to stay in this wedge and maybe go back down again and eventually hit 101, the absolute low, 100.8. So the dollar, I mean, look, we have news every day. You know, we have non-farm payrolls tomorrow, for example. That will definitely move. And if the reaction is higher, then we'll be breaking out this descending, but it's about to close. Where do we close? So I don't really need to talk about where I think it will go. We have this descending. This doesn't count anymore, by the way. So let's just see where it ends up on the chart. Obviously, that will affect commodities, gold and silver, which we'll get to soon. Let's look at commodities now, actually. So copper. I like to delete these little annotations, but yeah, copper, I do think, well, that's what I think is going to happen. I think sideways and then break out. Now, it didn't break out when it was here. It tried. You can see it hit its head many times, failed, and therefore we went lower. But I think it's going to try again, and I think it will succeed. I don't think we're going to go lower and start to, test this prior support down here, but that's where it would go if it fails. This is now irrelevant. So we have to redraw this now. So, now we're going to test this. Do we try again like a little cup and handle? So for example, we try again, and then we break out and close higher, and then we go up. Or obviously, do we just test it and fail? And if we fail, then we go back down here. Not sure. I think we're going to go higher. That's basically my analysis on copper. Natural gas. I mean, yeah, I do think it's going to go up, but to be honest, this move lower, it's hanging around too long. I know it's broken out of this descending, but it's been a slow breakout. And normally when I look at a chart like this, a stock or something, and it's sort of gone up all the way back down again, if it doesn't bounce quickly, it's kind of going to fail. Now, if I zoom out, and obviously this is a commodity, and knowing what I know, for me, this is a buy and we should be going up. But I do not discount the potential for a move lower, because it's just looking at it technically, it's just taken too long to go up higher. This is not the biggest move up, and there are too many bars too low. So definitely not the strongest bounce, but let's give it a few more days at least. But I'm not selling actually, so I'm not going to give it a few more days. I'm going to give it a few more months. If it goes lower, then, let me wait for a close below 2 before looking at the next ad. But I'm very happy just owning it, generally average, I don't know, 2.5-ish, let's say, no problem. 2.5 for me is the same as 2.2 where we are now. No difference. If you zoom out, it's like no difference. So yeah, natural gas, weak bounce, but still not over and out. Oil. Okay, so obviously we had this massive pump from the news, the Eastern Alliance. I'm gonna have to start referring to it like that. The Eastern Alliance, coordinated cuts, price goes up. Now we're sort of sideways flagging above or around resistance, just below it now. But it's not the strictest resistance. I don't think we're gonna go lower, because you can't, in my opinion, you can't sort of go lower after this massive recent news has just pushed the price all the way up. I mean, what will make it go lower? I have the market crashing or Biden releasing, that would be the dumbest thing in the world, the rest of the reserves. No, I think we're going to go, grind sideways, maybe a tiny bit lower, but, close above 83. I'm going to delete this scenario that it goes lower. I just don't see it happening at all. So oil, that seemed to have been a nice dip. And now when you zoom out, you start to say technicals really do work, even though this big pump here was macro news. It's somehow technicals always know. So yeah, sideways grind and then higher. We're looking for a close above 83. I'm in my little Prosper Energy PEI stock, and that's starting to, that had a nice move up with this move up. So I'm happy to know that it's correlated to oil, which means I can now say I have skin in the game in oil and natural gas. Uranium, though, I don't have skin in the game. I was very upset that I didn't add here, but maybe that was a blessing in disguise, because after technically closing beyond this descending line, though it wasn't the strongest close, we had red candle days, and I did mention that it looks like uranium is pretty weak. This is not the, I mean, I did expect a bit of a sideways down move, but not this much, this fast. And, if you look at the uranium stocks ETF, what is it, URNM or something, obviously it follows a very similar trajectory, very similar. Look at that. I just feel like, especially if the market goes lower, and I did say I think uranium is following the market. It's not like gold, which is the opposite, all the way at new highs. I just feel like we could hit this, Okay, now I'm looking at uranium ETF, the stock, sorry, but just feel like, little bounce. You can't just go straight through, and then a close below. I mean, this is what I'm hoping. I'm hoping it's not a strategy, but I just see the potential, really. I mean, if I was in uranium, I would be a bit worried from this very quick and strong retracement. Here's uranium, not much difference at all. So, I mean, who knows? We may just bounce a little bit earlier. We could bounce straight away today, but it has to do that. It has to bounce today and then start getting back up here, because this is very weak price action from uranium. Look at this massive drop very quickly. 3 days just undid almost what it did in 5 or 6 days. And that's not with the market crashing, by the way. And that's with the dollar going down. So yeah, I don't know. Was there some specific uranium supply demand news, or I didn't read anything crazy. I don't know if any country just all of a sudden banned nuclear. I don't think so anyway. I think it's quite the opposite. Okay, gold and silver. When you zoom out and you look at gold and silver, how many times did it hold above 2000? Well, the last time during the Russian invasion, it was just one day. Next day, we were basically straight below. Or the third day, we popped a bit. But, we're starting to form a small base here. And it's allowed to go lower than 2000. But, we're forming a base 2020-ish. So it's looking okay. Yeah, let's see. We have news, jobless claims, NFP, that will move it. If it moves it higher, this time is different. This would indicate gold is ready to stay above 2000, maybe even visit the highs of 2075 or whatever it is. So gold still strong, silver still strong. Look at this basing here above. Look, and actually this resistance line I put, because it was the old high, we touched it here, we touched it there twice in 2 days so far. So, and if we go lower, we have more support. We have the descending line that should act as support rather than resistance. So I'm going to say gold and silver is still strong. I'm not going to overanalyze this because it's still early days. So obviously we have resistance lines on the way up. Very clear to me, very correct. Gold, there's only one, very obvious. So let's just see. Let's wait for the chart to play out. I'm going to leave the trend lines as I have them. This one I may delete though. This one may still prove worthy. If it goes lower, I could extend it, but I don't want to ruin the chart. So I'm going to leave the trend lines as they are. Okay, let's look at the miners. Miners are okay too, following gold and silver. Basically, yesterday was a sideways day. GDXJ, sideways day. I mean, we ventured lower and then we closed pretty decently off the lows. You know, we have that resistance very nearby on the upside, GDXJ at least. Bit of, yeah, I mean, I'm just gonna let it play out. You know, I've sold what I need to sell. I'm not touching the seniors until I see GDX around 36. I'm not touching my juniors until I probably see this here 44, 44, yeah, 44. Because the juniors, and I'm talking about the micro juniors too, you know, the really tiny people who haven't moved yet, they have a lot of percentage moves to make. So selling early would be catastrophic long term. And I think it's time to zoom out of the GDXs, GDXJs, and remember where gold is, and remember the fundamentals. You know, it's for me. I think I've got to stop trying to be too cute. So I've sold already what I need to sell. Now hands off. You know, even turn off the screens and go outside if you need to. But I'm not touching. Well, I'm pretty disciplined, so I don't need to really worry about that. Maybe for other people who feel like over trading, that could be a problem if you hold miners. Just have your plan, trim where you want to trim, leave it. You know, don't worry about a little 3% gain when there's a potential for 30% gain in 2 weeks, for example. So yeah, that'll do. You know, Bitcoin, I haven't covered Bitcoin in a while, but it's just holding sideways. Some days I feel like it's weak because it's weak relative to stocks, relative to gold and silver. It's like not really correlated sometimes. It's just a lot of resistance around 29,000, but at the same time it's holding its highs, you know. And I can really imagine just all of a sudden one day it just has a big candle, like these candles, just one big candle, and straight away we're at 30,000. And as soon as you see that, you're thinking, oh my god, if it dips back down to the 27,000s I'm buying, and then you zoom out, you think, okay, I think the low is in. Now, a lot of people I respect think that it's going lower to new lows, in fact. And I hope that happens because I want to add more to my Hive miner, but maybe they're wrong, you know, and they are good traders, so they will adapt technically. And if they're wrong, they admit it in 5 minutes, and then they change their strategy straight away. So yeah, it's just interesting how Bitcoin is holding and flagging at its highs. But to me, the support on the way down, 26,500 has to hold. Close below that, bam, we go at least to 24,000, maybe lower. So that's why I have that trend line. And on the upside, you know what, this won't even count. This won't even count. If we break 29,000, we're not just going to go to 30. We're going to, actually 30 is only a psychological one. So I'm going to delete that one. No trend line needed. It's probably going to go to 31,000, 32. Yeah, that'll do. Let's see what happens today. Hope you enjoyed that.